Morning everybody, welcome to Stockradar Stocks on the Move. Today's date is the 3rd of April 2025. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, lots to get through today. Portfolio review. Portfolios are just like trading really, they require focus, method and discipline, and we're going to go through that a bit later on today. First we want to get straight into the trend intensity ratings. An interesting group of stocks at the moment. We've got a few metals in there: Evolution, Genesis, Gold Road, Northern Star, Proesis, and then RRL there. Then we're intermittently there interspersed with a couple of industrials there. Medibank Private making new highs, as is QBE, and Telstra's been a bit of a recovery stock, and you can see there it's not doing too badly. That chart's out of date, should be I think it closed at 427 or something yesterday, and A2M's also doing very well. So a couple of industrials there, in a dearth of opportunities in that sector, but the miners are what's running at the moment, so that's where we've been their focus, and we've been lucky we've got into a few goals there, and it has been an extended trend. Stock pick count really is not much change. It's down 1 to 34, so we lost one stock this week. There hasn't been many entries in the last couple of weeks, so that means our portfolios, which we'll have a look at later on, are a little bit short on stock picks, and an unusual situation, but so we'll talk about that a bit later on. So that's what they look like, and we've got 4 ETFs of 26, so stock pick count's pretty weak. Let's get straight into the overseas markets. Okay, the Dow, well, we can see there's a change happening here, slowly but surely. We're whittling away at this support here. We know markets tend to come back and they can go straight back up against stock markets, so we've got to be a little bit careful, but we're certainly seeing a change here, not only in price but also volume. Some pretty heavy volumes going through here, so there's certainly some selling in this market, and it is now pushing the price down. If we look at the other indices, Nasdaq, similar picture, and we've had a bit of a recovery this week. Nothing really to speak of. The trend is really down there at the moment. We've got lower lows there, looking at lower highs. S&P 500 is also the same situation. Again, we've got lots of volume going through here, lots of selling pressure here, pushing this index down, and it's just recovered again this week a little bit, but probably not too hopeful in the near future for that. Okay, our market as well, the S&P ASX 200 is certainly broken support there. We've broken that nexus, as we know, of the higher highs and higher lows, so it's also looking on the weak side at the moment. So that's what the indices in the ASX looks like. The gold, well, it's just powering ahead. There's not a lot of change this week. Gold is really powering ahead. I see there's some pretty big targets being set out there now, which is a bit of a worry. But anyway, the market is going up, and we've got some very good volume there, good momentum, so there's no reason to say it's going to hold at the moment. Copper has broken through, still a little bit of a lull this week, but still holding onto those gains pretty well. So copper's still looking like a pretty bullish picture to me. And this big resistance area is starting to erode, and if it does really consolidate above there, then we can certainly look for some more gains there. And Brent really doing nothing at all. Again, pressure on the downside. We're getting a bit of a rally there. Volumes there, but not fantastic, which we've seen it all before. So it's just getting pushed into this little triangular pattern here, the apex here, and as to what happens, we don't really know, but it may just fizzle out the end here. We're not too sure, but really it's nothing that we're not doing anything in that market anyway. Okay, so that's the stock pick count overseas markets. Okay, the trend, the stock picks. Okay, sorry, the stocks we're looking at today. I'm going to go through a few stocks today. Not so much about picking winners at the moment, but just look at some stocks and how we look at them, and why we're sort of negative or positive on these stocks, and just to get an idea and what opportunities there may well be. So first, we're going to start off with BHP, which we haven't looked at for a while. And really, if I just go back in a bit of history here, we can just see what's happened. It's had a big uptrend, and all of a sudden it's really run into trouble here, up around the $50 area, can't get through. And it's now starting to sort of break these sort of uptrend lines here, the longer term ones under threat. We've got a bit of support coming through at $40 here, just under $40, $38. But it's starting to wilt there, and if we just sort of blow this up a little bit more and get a closer look at it, we can start to see, like this week, it started to fall below here, which is a bit of a worry. If we just blow this volume up a little bit there, you can see there's quite a bit of selling pushing the price down here, a bit of buying there, so we're not out of the woods yet, but it's certainly not looking that flash. We've got a lower high, lower low situation going on at the moment. So for BHP, that whole picture there doesn't really look that flash to me at the moment. So we're certainly standing aside from BHP while it's still behaving like this in this sideways action. Sorry about that. In this sideways action. Okay, so it's a -8 trend intensity rating, which is not that good for BHP. So again, we're staying out of that one there. Rio, which is more iron ore based, It's sort of, it's going sideways. Again, the similar situation here. We've had sort of a reasonable uptrend in prices here, which is starting to erode now as these lows start to get a bit lower highs, lower lows, and we're in a bit of a trading range here. But it doesn't look that good. The 10 and 10T ratings are a lot better for Rio. It's 0 because it's more going sideways to down at the moment. But still, it's not looking not looking like it really wants to go up. We've got a bit of volume appearing here, not doing a lot to the price. Momentum's neutral. So again, and really until we see a break of R1, we're not really that interested in this one at the moment. So that's up around 136 and current price is around 115. Okay, so that's Rio and those things. I'm sorry to be more positive, but that's how I see it at the moment. That's what they're telling me. Coles Group, we know the Coles Woolworths story, an interesting one. Why everyone's shopping at Coles now instead of Woolworths apparently. And the share price, after taking a bit of a dip when it broke to new highs, is back on track again and looking like it wants to go higher again. If I just blow this up a little bit, we can see a bit of volume starting to appear here as it moves out of this range. And so we're still holding our position. Trend intensity rating is +9 on Coles, above the average. Volume's okay. Momentum's gone flat a little bit, but it's still positive and still well above the 0 level. So that looks okay to me. Trend intensity rating is still +9, as I say. Okay, so that's that one. Now I'm going to look at a couple of other property stocks, which we've sort of looked at for a while, but they're sort of interesting. They're sort of bubbling along without actually breaking higher. And the first one we're going to look at is Stockradar, and we've got this big high up here at it's just under 550 there, which you can see is the old highs here. It's still got these high lows here, pushing hard, but we just can't get through. So again, we sit and wait for the signal, which hasn't come yet. It's looking like it probably wants to, but it hasn't done yet. So as far as Stockland goes, we just wait till this falls off here. Trend intensity rating is -3, so it's in that neutral zone, which is good for us if it does break higher. But we can see the selling was quite heavy here, so the resistance is quite strong. So we just wait and see what happens here. On the back of Stockland, I look at vicinity centres, which is also trying to move higher. We got taken out in this. We had a new high trade here and got taken out. We're neutral on it. It's starting to get back on track there. We've got a bit of volume in the last couple of days. Trend intensity rating is 0. It could break up. It's sitting there waiting, as I am waiting, and with Stockland, the same sort of thing. So, and the same thing here with Dexus, which is trying to make a base here. It's got quite a good accumulation pattern here. We can see the big downtrend that was occurring for quite some time. It's now sort of up testing that downtrend status. So we've got a few things here. Look at our switch zone. We've got the moving average, which is now sort of starting to trade above, and it's certainly flattened out the moving average, which is good. We've got this horizontal resistance up around 780, and the downtrend line's about the same sort of spot. So that area is quite interesting up here. This whole switch zone is really what we want to see get through to try and start pushing into a new uptrend. We've got some good volume patterns here. If I just squeeze this up here, we can see there's some good volume patterns here on the rallies, which has been good. There's been some selling here, but hasn't made new lows, which is constructive. So this is what happens in an accumulation basing pattern. So I'm just pointing out to you, we can see what BHP and Rio are doing. Now we can see what the property stocks they are trying. Some are making new highs, some is coming off a low base. But they've still got those patterns there that are quite constructive. So they're certainly worth keeping an eye on. And we know things like Goodman Group, which fell out of bed, it had a huge run. So they're all in different positions, which is interesting at the moment because they're doing different things. But so we take them individually, and we can see these three stocks here are offering potential for a rally if they can get through some resistance levels. A couple of other stocks which we haven't really looked at for a long time, and the reason being is all they've done is gone sideways. And these are transport stocks, and this is Transurban. Which is, you can see this huge support down here at around $12, which is very, very strong indeed, and doesn't seem to want to break. So it's a good sign. But as far as upside, we're not really seeing anything. In fact, we're now seeing a series of lower highs. He's squeezing this stock price into this $14, $12 range. It's certainly struggling. Transurban, the trend intensity rating is 0. It's going sideways. The trading range prevails. It looks like it's got solid support, but we just can't get on the move. So really, this would be encouraging about move through the $14 level, but ultimately we're looking up here around about $15.30 for a serious break higher. Okay, so that's Transurban. Auckland International is a similar situation to the transport stock, and you can see the sideways trading range is very similar to Transurban. Trend intensity rating is also +1 because it's going sideways. It did look quite good in this rally here. It was quite a bit of volume that went through here, and momentum certainly jumped higher, so it all looked quite good there. Then all of a sudden it sort of fell flat. And now volume's gone mixed and momentum's sort of gone out of it, so it's back to trend intensity rating at -1. And again, it's in this range here. Really, we're looking for this break up around 830 to really excite the market. But for the moment, it's stuck in a trading range. So they're the stocks that we just sort of tend to leave. We're not doing anything. The trend intensity rating is neutral. They're going sideways. They're not telling us anything. And trying to read too much into these trading ranges is quite a dangerous thing. And that's what people do sometimes. They try to look for every little nuance in there. But really, the big picture is really telling you what's happening. S1 and R1 are the two big levels for Auckland International Airport and also Transurban. Okay, now as far as other stocks go, now we've lost quite a few stocks the last couple of months. We've taken some profits on some big stocks and locked them in. Some have come down, some haven't. If we just look at a couple here, because the strategy that Stockradar has is, we protect, when a stock goes off, we protect the profit, which we have here with Computershare. We had a very quick profit here that ran from about $28 ran up to 42, and we got out here just below here at 38, just above $38. So our stop went off here. We've protected our loss, which is what our strategy is, and now we wait for this market to go down sideways, or if it goes back up again, we will then jump on the trend, because we always have to be on a trend, an uptrend, and that's our signal. If we're neutral, the new high is our signal. So that's what happens with these stocks. They come down, and maybe you don't agree with the stop going off, but we have protected our profits, and that's what we need to do. The name of the game is making money, not being right. So we just now sit still with Computershare and wait for either a new high to occur or something from lower levels. Okay, similar thing with Technology One. I think we looked at this one last week, and we can see this sort of similar pattern here where it's broken down, hasn't really done too much yet. It's gone a bit sideways here. So this stock can go sideways or down, neither of which we're interested in, or it can go up again and make a new high, which we are. So it may well do that. We don't know yet. So as I say, we're just neutral. We've just taken our profit and we just stand aside, and we feel comfortable with that position, which is the right position to be in for us at the moment. So again, trend intensity rating is -3. So it's fairly neutral. We've got sort of, we've had a bit of selling here on this stock. The momentum's certainly gone out of this, so it certainly has changed quite a bit, the rating, and a new high might change things, but we have to wait for that to happen, and it hasn't happened yet. Okay, unlike things like maybe Pro Medicus, which has come off pretty badly from those highs there. Okay, the other one I want to look at today was Sims Group. We looked at this last week. It's going along nicely. It kicked up here. All markets go up, all markets go down, within trends, within downtrends, within uptrends. So we're still within an uptrend here. You can see the high highs, high lows pushing this price. We've got a small correction happening here. No volume really. Momentum's still good. So really, this looks fine to me. Trend intensity rating is +9. The perspective we get from the trend intensity rating makes it clear and simple. We just move on and wait till next week, move our stop if we need to, and that's the process we go through. Okay, then the final stock I've got for you is another one of those little miners. We talked about the miners a little bit. I haven't gone too overboard, but we have got some good stocks in there, and Capricorn is another one, which has gone from about $5 to nearly $8 now. It's had a very good breakout here, a simple breakout to new highs, a new trend move of high highs, high lows. It's had very little correction along the way, which has been good. So we just continue to lift our stop, okay? So once we're in a trade, so our analysis was what gets us in, our price signal, our moving average signal, our volume, and our trend intensity. Okay, so that's what gets us in, and now we manage the trade from a risk management point of view, which is where our stop is going to go, either limiting our losses or protecting our profits, one or the other. And in this instance, our profits are fairly good, and we're protecting those very, very strongly at the moment. So we can also see down here with Capricorn, an interesting situation with all these beautiful green bars here. Momentum is incredibly strong here. So, you get a trend intensity rating of +9, which is fantastic for Capricorn. So that's the perspective on that one. Okay, so that's really most of the stocks I've got for today. I talked about those 4 industrials that are standing out and our trend intensity ratings at the start of it. There's 2 of those are actually making new all-time highs, which is great. And there are also some other stocks I'm looking at. You can go to Stockradar and see what else I'm looking at. There's 4 excellent new opportunities I think are about to come up. We don't have a lot of stock picks, so certainly at some stage there will be some stock picks coming up. But for the moment, we're just a bit short, so our portfolios have been clipped back a bit the last couple of days. So we're going to have a look at that right now. But as they go to the trading centre and you look for these opportunities, all these new opportunities that are occurring that we're talking about, okay? So Just before we get onto the slides, you can take a free trial of Stockradar. Gives you complete access to the website and our premier trading page, the Trading Centre, which organises all your covered stocks into an easy-to-read, simple, tabulated format. Stock pick status on all stocks with data entry and price, stops, reversal levels, and the all-important trend intensity rating to help guide you as to the trending attributes of a stock. Okay, so that's my little sell pitch. Now let's get on to the portfolios. Okay. Firstly, let's have a look at the portfolios as they stand. You can see the conservative portfolio, which you can see on the homepage. At the moment, we only have 4 out of 10 stocks, so we've lost quite a few, and we haven't had any new ones. So at the moment, we're 40% equities and 60% cash on that one, and the CAGR is currently from 2003 at 10.9%. This is a very steady portfolio that ranges between 9.5% to maybe 11%, but almost a predictable portfolio. So for those that want some real safety, this is the portfolio for you. And at the moment, as I said, it's 40% equities, 60% cash, so we are ready to add a couple more when they come up. The Energizer 5 is down to 2 of 5. Similar situation, 40% equity, 60% cash. It's running at 17.3. We've had a huge move on that portfolio, and we'll see the graph on the next screen. The 5-stock portfolio has shot up, as it does. As I said, it's a more volatile portfolio, but we've had some really good stocks in there. Computershare, Pro Medicus, Evolution's in there now, and which have really boosted the gains. IAG, some really good stock that have been in that portfolio, which has really pushed it along nicely. And we'll have a look at the graph in a second. The Energizer 10 stock, which gives you less returns than the 5 stock, but it's probably less volatile. Okay, it's currently 5 of 10, so it's 50% equities, 50% cash at the moment. Plenty of room to move there. But all these portfolios are quite low historically. Very rarely do we go down to 1 or 2 stocks. And you can see the new 5-stock, the more recent 5-stock Energizer, the one I started in August 20 and the one I started in March 21, are both only 1 stock. So they're only 20% equities and 80% cash. The move since August 20 is 12% CAGR, which is good on the 5-stock for this one, and 14.4 on the one that started in March 21. That has a little bit more of that difficult period involved in it, but then moving along quite nicely again now to the levels we expect them to do to provide the returns that we want. Okay, and the accumulation index over this period is generating 8.8%. It's come off a little bit of late, so it's eased back. There. So that's how the portfolios look. That's what they're doing at the moment. The returns have been good. We've cashed in. We're just standing aside in a lot of stocks at the moment, waiting for the next move, which may or may not come. We just have to wait patiently. Okay, the graph itself, which you see on the homepage, which I try and update most weeks, shows you the 5-stock, which is at 17.3, and what it's done. I mean, it does this. That's certainly what it does do. 2015, 2017 was enormous. Then we had a really flat couple of years, which is terrible. But you can see the things about this is COVID, and this is actually the GFC down here. Now, these events, they pale into insignificance when considering what the market does on the upside. And you can see the size of the GFC, which is back in 07, 08, and you can see the size of COVID, which is back in 2020. Now, it was huge. It's a lot smaller than it was, and that's how the portfolios work. And that's how the stock market works. And we just try and accentuate these moves. So this down here is the accumulation index. So we just try and magnify these moves as best we can by not holding stocks that are going down, which is probably the most important thing, which the accumulation index must do. So we just eradicate stocks that are going down and try and focus on ones that are going up. So our 10 stock is at 13.1%, and the conservative portfolio, as you can see, has also had a pretty good jump up. We've had some really good runs and some really good stocks in the last 12 months, or last 2 years, in fact, and which have really driven the portfolios. But that's how it works. You have your difficult periods and you have your good periods, but you've got to play the game the same way all the time to generate these benefits. So the way you can play this, you've got options. You can follow the Stockradar 5 or 10 stock Energizer if you want to follow those ones, or you can build your own by starting today as new stocks come in, and you can build your own 5 or 10 stock portfolio. But I can help you do all that sort of stuff. And you can also, if you want to, just follow the conservative portfolio, which is a rest easy sort of portfolio that just allows you to sleep well and not worry too much about things. GFCs and COVIDs always happen, but in the scheme of things, they become very small as time goes on. Okay, so that's the chart, and that's your options there. Just a bit about the premium portfolio service that we offer. We have two services, the basic and the portfolio service. The portfolio service is basically a hand holder designed to help educate you on how to run a portfolio of stocks, not just trading stocks. So you learn how to manage portfolio functions. It removes the effect of emotional trading because we just do what we're told. The same thing as with when I'm trading. We're always trying to preserve capital, and we trade with discipline. Not that different to just trading stocks. The main thing is learning those key tools you have and the filters we use in selecting stocks in our portfolios. Okay, and all this is based on the systematic methodology of Stockradar and the 22 years of performance history we have done since 2003 on the portfolios. Okay. So really, it just really is always keeping things simple, tight, and concise, which is my total motto. Trying to complicate things and overcomplicate things is a natural human instinct, but really it doesn't work that well when you try and build in too many rules and exceptions. So I keep it, as I say, simple, tight, and close. There's yes, no answer to every situation. No if, buts, or maybes. My trend intensity rating. There's no grey areas. There's only certain signals that can be generated, either yes or no, on or off, this sort of thing, and that's the way we like it to do it. Okay, so that's most of what I got for you today. The newsletter was out this last week. I ranted about the bottom-up approach because that's what we live by. We cover utility stocks, and there's some bonus offerings in there because the utility stocks group is quite small. So I've added a few more metal stocks and stuff in there for you to have a look at. Some of the things that I think might be opportunities coming up soon. As well as so that's about all I've got for you there. We give you the heads up using filters and tools to guide you in managing and running trading portfolios. That's what we do. That's my game. Again, it comes down to the ability to implement correctly. Just as if you're trading a stock, to do all the portfolio things you've got to do, which stocks you do take them, why you take them, is very important. As well as returns we've achieved, capital preservation and keeping trading costs low is a huge part of our focus because recurring things like brokerage are things that you can whittle right down to next to nothing at the moment. So that's great. So I hope you get an idea of how the portfolios are going now. If it interests you, give me a call. You can sign up on the website. So it's all there for you to do. Okay, that's all I've got for you today. Watch your trends, heed your stops, keep it simple, have fun, stay safe, and I'll see you all next week. Thanks very much.